Good everyone, welcome back to our next edition of Econ Talks. Gareth, we've had the latest population figures come in for mid-2024. Population growing, up 1.8%, still pretty solid. In fact, you'd call that strong growth on many days over sort of the history of New Zealand, but also slowing back quite a bit from even faster population growth sort of last year when we had much stronger levels of migrant inflows. I thought it was fascinating to see the likes of both births and deaths in New Zealand over the last year. Obviously, still a lot of them, but again, for both of those figures, actually lower than the year before, and the birth rate now plunging down to 1.53. You want to see a replacement rate of around 2.1 just to sort of feel like your population is going to stick around the normal levels. And so the demographic pressures coming forward here are quite stark. I mean, what are we seeing through at the moment? If both birth numbers and death numbers are a bit lower than normal, that sort of means that even with migration not quite as large as it might have been a year ago, it's still a pretty big influence on the population.
Yeah, and particularly on that birth side. I mean, typically what we see when there is an economic downturn and times are tough, money is tight, that birth rate does tend to fall. We're expecting a sort of a declining trend or a slowing trend in births anyway, but it is being exacerbated, I think, at the moment by difficult economic conditions, particularly when you think about the affordability of housing. That is quite a critical component in the overall decisions that people make around when and how many children they might have. And I think at the moment people are sort of backing away from that because housing is such a critical situation and so difficult to get into, so expensive to sort of meet those bills as well. I mean, the other interesting component around the migration that you mentioned is what we've seen is with revisions to those migration numbers that Stats NZ have made, is that actually the population figure they published for June, the latest data, was actually lower than the previous estimate that they had for the March quarter. So there is a definite shift there in terms of those migration numbers coming through. We know they peaked late last year, but they're sitting now at around about a net inflow of 73,000 for the last year. And that is contributing, as you said, to what is quite a significant slowdown in population growth. I think it was up at 3% at its peak late last year and now down at 1.8%. So there is that sort of stimulus or support for the economy from more people coming through, that is waning quite significantly. And at the same time, obviously, our economic growth prospects in the near term still remaining quite weak. So, yeah, a bit of a shift there in the sort of mix of growth that is occurring.
Definitely. And when we look at, some of those age groups as well, you can very much see there's a lot of sort of younger 20s and 30s Kiwis who are heading out of the country in terms of migration. But also that sort of shift in general net migration means that your sort of growth of your under 60s, which had been quite high and sort of in line with the over 60s group in recent times, that under 60s growth has now started to pull back as migration has shifted. Over 60s still growing. We've still got an aging population. So some interesting ones there. Now, despite all that, like we said, population is still growing at a sort of a fairly strong clip relative to history. Hasn't seemed to influence the housing market quite as much. I mean, we got the latest housing figures out the other day from the Real Estate Institute. A big bounce back in sales, but off sort of like quite a poor result the month before. Realistically, though, still not a lot of heat coming through, is there, in the housing market?
No, so sales is sitting at under 6,000 a month. So you're talking around about 70,000 sales a year. That's below the sort of historic averages that we've seen. So yes, it was a better result, but it was after 3 months of consistent declines and sort of only getting back to the level we were at March. The other signs that we're getting from the housing market are, continuing weakness, whether it's the number of days to sell continuing to rise, the stock of property available to buy out there is also pushing up further as well. And prices were flat, which was better than the last couple of months where I think they have been tracking down, but there's certainly not that upward momentum there. And I think when you look forward, if you are getting that net migration in particular slowing, that population growth slowing, then sort of any hopes of a significant housing rally, which I think some forecasters were looking at last year or in the second half of last year and predicting it for 24 and 25, I think your sort of expectations around that rally in the housing market do have to be pared back as a sort of fundamental underlying demand associated with faster population growth sort of disappears as that migration falls away. At the moment, I'd be counterbalancing that a little bit by the sort of positive news coming through for the housing market, at least in terms of mortgage rates coming down. with the Reserve Bank cutting the official cash rate. Certainly, in my view, in particular, is that the interest rate situation has been something of a constraint, or a very big constraint, on the number of buyers in the market and affordability, those debt servicing costs as well. So that situation starting to improve, but when you put that alongside slowing population growth, I'd be cautious about expecting too much positivity for the housing market, certainly in the next 6 months, but even through 2025 as well. I'd be cautious about where that sort of demand for the market goes.
Absolutely, and I think part of that is because even though you've seen a number of the retail banks that have actually cut their mortgage rates back, they're cutting them back from still quite high to fairly high, in a sense. So it's not like it's a huge number of people out there who are now all of a sudden flush with cash and just going out to buy houses like no tomorrow. I mean, and especially on the investor side, I've heard some people say, oh, this is really going to stimulate investors back into the market. Interest rates have come down. Yeah, yields are improving. Yeah, your yields are improving from super rubbish to still fairly rubbish, and you have to put cash in yourself every week. And let's be clear, the outlook for capital gains is not nearly as strong and sort of completely solid as it might have been a couple of years back either. So you're right. I think there is still a lot of water to go under that bridge. Yes, lower interest rates and certainly continually lower interest rates as they continue to fall will support a bit more activity, but it's not like we're sort of going from you just turn the key and all of a sudden it goes from not on to completely on. It is sort of you're warming up the market from sort of still a fairly cold or lukewarm position. I think we'll assess how all of those different trends move, in both in terms of population growth, but also what that means for the housing market and how interest rates might influence all of this on one of our future editions of Econ Talks.